Good afternoon, ladies and gentlemen. This is Michael Camo from T3 Live. Can everybody out there hear me? Could you just give me a yes in the questions box if you can hear me? I just want to double check. All right, cool. Awesome. So, welcome to today's event, How to Earn Windfall Profits by Predicting Earnings Gaps with my good friend, Sami Abusaad. Now, this is a hot topic right now because earnings season starts in less than 2 weeks. And in fact, there are already companies reporting earnings. And it seems like everybody's interested in earnings. We did a poll, I'm sure you saw before we launched the webinar. We asked people, are you trading stocks ahead of earnings? And 12% said, yes, I'm making money. 4% said, yes, I'm losing money. And 85% said, no, but I'd like to learn. So you are definitely in the right place if you're interested in trading earnings, because Sami's going to give you an awesome lesson around his strategy. So before we get started, just please read the disclosures. Why don't you guys tell me where you're from, what you're trading, what you're into while you read these. Let's see who we have today. We got Atlanta, Florida, New York, London, South Florida, Philadelphia. Awesome. Boulder, Colorado, Manchester, UK. Somebody's trading Forex. Okay. All right. So the quick housekeeping items. We are recording this event. You will get a replay tonight at 7 o'clock. Also, turn off your TV, your smartphones, and any other distractions because we are making an important announcement. And especially trading platforms. Trading platforms can really interfere with video streaming performance, so please shut those down if you can. And later on, we're going to offer you a special opportunity to take your trading to the next level. So I'm sure many of you know Sami. Who here knows Sami? Anybody in strategic day trader, strategic swing trader? I'm sure we have a bunch of Sami fans in here. So Sami is our director of education. He's been a professional trader since 2007. He's the lead moderator of the Strategic Day Trader Room. Yeah, everybody's saying now, yep, love Sami. I'm in Strategic Day Trader. Yeah, he's also head of Strategic Swing Trader. He runs our private mentorship program, and his expertise really runs the gamut. He has deep expertise in core trading, day trading, swing trading, especially gaps and climactic plays. And he's creator of the Earnings Engine program, which you are here to learn about. And Sami's going to give you an amazing sneak preview of that course tonight. So there's basically one big thing that makes Sami different from most of the people out there. I've been in this industry for 15 years, and Sami can do two things most people can do. The first thing is he can actually trade and actually make money. I don't know. You might have seen these articles on T3Live.com, but this was the video that kind of put Sami's earning strategy on the map. He kind of casually made a video talking about how he made over $78,000 in 4 weeks trading earnings. And that's when we decided there's really something here. Then some other ones from May 13th of this year, he made $37,000 in 8 days. August 8th, $53,000 in 2 days. And then August 9th, he had a huge day, almost $87,000 in 1 day of trading earnings. But he's also an incredible teacher. In fact, we get more compliments on his teaching skills than anything else. So this is Sami teaching at the Active Trader Summit in New York City, and this is him teaching at one of his private mentorships. Sorry, there's a typo. It should be 4K. I accidentally left 5K in there. Yeah, $4,000 private mentorships. So it's pretty awesome that you can get a free lesson from him now. So with that said, I am going to pass the mic over to Sami so he can jump into the lesson. So Sami's coming on. He's right about to share his screen.
Hey everybody, good afternoon. Thank you so much, Mike. Always a pleasure to do these webinars with you. Such a good friend, Mike, you are. Thank you. All right, guys, welcome to tonight's webinar. I'm glad to have you all. You're in for a treat, I think. And I just want to say, feel free to ask any questions you want. Just type them in. Mike and I will get to the questions towards the end of the presentation, but go ahead and type them in as they come up. Don't wait until the end, okay? So today, I want to talk about the earnings season because it's coming up in a couple of weeks from now. Actually, I guess, what is it, JPM, the first Dow company to report, it'll be reporting on Monday the 14th. So that's in 11 days from now. And earnings season is just a great time to make a lot of money really quickly. I want to prove to you that trading earnings season is simpler than you think. You'll know what to stop doing, which I guess is the first step when it comes to success, right? You remember that quote, I don't know the key to success, but I know that the key to failure is, fill in the blank, work on eliminating that. That's what I always tell my students, is you may not know everything that I know. Don't worry about it. Just, you know what not to do. Stop doing that, and then what do you end up with? The good stuff. So you'll know what to stop doing, and you'll see that trading earnings season is as easy as following a checklist. I'm actually going to give you a checklist. Your mindset will change if you take what I teach to heart, okay? If you actually take what I teach to heart, you'll start to take advantage of momentary panic from other traders. You'll avoid destructive but easy to avoid mistakes, and you'll be happy about earnings season. If earnings season is stressing you out, you're actually doing it wrong. It should be your happy season. 4 times a year, 4 quarters, right? Those are the best times of the year, the best 4 months. Actually, it's six weeks at a time. So those are the best periods in the whole year. Today's roadmap. So first concept we're going to cover is time compression, which is the main reason to trade earnings. Time compression. We're going to talk about why you don't need to be a psychic to trade earnings. And I'm going to share with you my simple process for trading earnings. Last but not least, I'm going to talk about momentary panic, the secret principle behind my earnings strategy. Before we get started, just a little bit about my trading journey. I started trading in 2005 while I was still a full-time employee at a Big 4 accounting firm. Actually, at KPMG is the name of the firm. And I started trading, swing trading. Opened a trading account with $16,000. The interest rate at the time was 4%. And I said, I thought, 4%, that's not a lot. I can do better. So I decided to withdraw. I had $16,000 with, remember that company called ING Direct? I think it got acquired by Capital One. That's where I had my $16,000. And put them in a trading account with TD Ameritrade. Started swing trading while I still had a full-time job. In 6 months, I made $10,000 from 16 to 26. That's a good amount in 6 months, just swing trading. And I made it a rule. I read about how Warren Buffett didn't even have a stock ticker machine in his office. So I made it a rule not to look at my stocks, to only look at my stocks once a week on the weekend. I said, if Warren Buffett, who has billions of dollars, can be disciplined enough and patient enough to let his trades, investments come to fruition and not look at his trades, so should I. So, and so I decided only once a week on the weekend. And then, as I said, in 6 months, my account grew to $26,000. 6 months later, I was at $50,000, let's say, but it was 50 plus. 6 months later, 50,000. That's when I was starting to think, my goodness, I'm slaving working as a senior auditor for a Big 4 accounting firm. They put you to work like crazy, and here I am making about the same amount of money, just looking at spending a couple of hours on the weekend. What the heck? I shared my results with my brother, who was a PhD, actually has 2 PhDs, so he's the brainiac in the family, and he was also blown away. He was a rising professor somewhere at a college, in the Bay Area, and he thought, my goodness, I'm not making this money. So he recommended that I look into the more active stocks, because he thought, if you can make that kind of money through buy and hold, imagine how much more you could make by trading actively. And he was referring to stocks on the biggest gainers, biggest losers list. So I started to pay attention to that and trade more actively. I'd wake up before I had to go to work. Living on the West Coast was an advantage. I needed, I had 2 hours a day that I could trade before I even had to go to work. So guess what happened? What do you think happened next? I, of course, listened to my brilliant brother and lost everything and $15,000 more. Would you believe? In a short amount of time, like 3 months, something like this. I was absolutely shocked. If any of you read the book called How I Made $2 Million in the Stock Market by Nicholas Darvis, I think is his name, it was the same kind of story. He made $500,000 trading from Paris. And when he decided to get closer to Wall Street by moving to New York, he lost 100,000 in a matter of 1 month, I think. And he decided to move back to Paris, because being closer to the market wasn't actually a good thing for him, right? It was the same exact thing, except dollars, smaller amounts here. So I was down $15,000. That's when I really realized that I didn't know as much as I thought I did. I had just gotten lucky, and I wasn't such a special talent, right? I'm sharing this with you all to tell you that my story is not any different than your story. Most of you probably have a similar story where you initially, some of you, I actually have a good friend of mine who made a good amount of money, a lot of money actually, initially, thinking he was really good. In fact, I don't usually tell the story. I'm not going to tell you the whole story because people don't believe it, wouldn't believe it probably. I have a friend whose first trade was up $1.2 million. Would you believe it? He started with $50,000 penny stock. It went to $5, and he pyramided. Everybody was telling him to get out, and he thought, as a novice trader, why should I get out? It keeps going up. It went to 1.2. By the time he liquidated, he ended up with $820 some, and all of that being lucky, because he didn't really know anything about the market. So you can get lucky in the beginning, as I did, and realize that no, there's nothing special about you. You're not the smartest guy in the world. It's just you happen to get lucky, and that's what happened to me. I got lucky through buy and hold. It was a bullish market, and when I started to trade actively, the more active you are, the more your psychology and knowledge is tested. Gave it all back. So again, I want you to know I'm not any more talented than the average person. Perhaps I'm a bit more driven, hardworking, that kind of thing, and I got that from my father. But that's about it. No special talents needed at all. What I teach, a 7th grader could do. Literally, a 7th grader could do. Why I trade earnings? Simple. I want the maximum movement in the minimum period of time, and that's the concept of time compression. The truth is, I just want to make money. And I want to make it as fast as I can when the opportunity is there, because the opportunities in the stock market don't last. They come and go. So when they present themselves, I want to take advantage right away. Some people, what they do is they say, okay, well, let me start out, let me paper trade, and let me start out. I mean, it's okay to paper trade. That's probably the wrong example the wrong thing to say. But the point is, when the opportunity is there, you got to go for it. You can't just wait around and thinking that it's going to last forever. It doesn't. It just doesn't. When it comes to earnings season, it's a schedule for fireworks for 6 weeks. Big gaps are guaranteed, which is what I want. It doesn't happen the whole year. Today I did the last night ANGO short, worked nicely, showed my P&L in the room today. So, but that's, just one trade. During earnings season, I often have 10, 15 trades at overnight. Get in at the close, get out the next day at the open. We'll talk about that in detail later on. Volatility is your best friend if you know what you're doing. Absolutely the truth. If you know what you're doing, obviously volatility is going to work in your favor, obviously. And you may start praying for a down market after this webinar. I actually yesterday recorded a video predicting that the market topped out. Of course, the market went up today, but I predict that we've seen the top in the market, and from here we should see lower prices. Okay, but that's another topic for another day. Why most people fail at trading earnings? Tell you why. Because first, they focus too much on predicting the future, right? They think, and this is what one of the main things about what I do that people find unbelievable. They think, how did you predict that? There must be, you must be lying to us, or your P&Ls must be fake or something like this. You don't need to be psychic. I'm going to teach you how to do that today. Typical pre-earnings analysis list that people look at, they try and predict earnings per share, revenues, profit margins, product unit sales, like how many Teslas, how many cars Tesla's going to sell, guidance, which specific item in the report the market will care about, what the stock and the options market are pricing in for a move, and how the market will react to all of that stuff. In February, we shorted when I say we, I mean myself as well as strategic swing trader members. It was an official call. We shorted Google, had a big run up into earnings. We actually shorted Google. Did you know that Google beat earnings and revenue, and we still gapped down? We still made money. Okay, so on Google in February, only one of the things on this list actually matter. Can you guess which one it is? Can you guess which one it is? Only one item actually truly matters, and I'm an accountant by trade. I went to the Ivy League of accounting firms. That's where I worked at. One of the best firms, one of the top 4 in the world. And I'm telling you, take it from an accountant, from a former CPA, that the only thing that matters is how the market will react to the report, not how earnings per share, revenues, profit margins, none of that stuff. It's how the market reacts. If you traded during the tech bubble in late 1990s, early 2000s, it wasn't very uncommon for the CEO or the CFO to come on the phone and say, well, we have a going concern issue, meaning they weren't sure they were going to be able to continue operations. We have a going concern issue. We're $5 million in debt. We have one product in the pipeline. We don't know if it's really going to pan out. We think the odds are 30% in our favor, 70% against us. But if we do succeed at manufacturing this or doing that, we will be a great company, whatever. And instead of crashing, the stock would actually double and triple on an announcement that in today's market would cause the stock to gap down 50, 60, 70%. Okay? That was typical back in, again, during the tech bubble. Why? Because people were just, bearish news were viewed bullishly. Likewise, in bearish markets, bullish news gets sold all the time. Bullish news gets sold, even in bearish markets, and vice versa in bullish markets, right? So what matters is how the market reacts to the report. Traders are also way too positive when it comes to earnings. They really are. That's why most people probably buy stocks into earnings. I short 64% of the time. And we get bigger negative reactions to earnings than positive reactions. In fact, it's 2 to 1. It's 2 to 1. It's 2.5 times. When the stock misses on earnings or basically gaps down, right? It usually is twice, 2.5 times as big as the positive reaction to earnings. And most people, what they do is they buy all the time. That's wrong. In fact, again, I short 64% of the time. Every play that is called in the Strategic Swing Trader newsletter is tracked with entry, exit, every little thing, right? So 64% have been short. Here's what the shorts made: $305,000. Would you believe it? As opposed to 33,000. Now, I do want to say that because of the volatility or the uncertainty in the market in 2019 and the tariff war, shorts have been just way better than longs. In a different market, let's say the war with the tariff war with China gets resolved, we'll have a much better, the longs will start to do much better. But for now, so far, the shorts have done a lot better than the longs. In fact, 10 to 1 almost, right? Those were the plays, the earnings plays. And I'll show you my P&Ls later on, okay? To recap, few traders follow these principles. Will you be different today? Stop trying to predict 10 million things or even 10 things. Focus on what really, really matters, which is price action. Price action tells me all that I need to know. You know why? Because it's the only truth. It's what people are doing. It's what Wall Street is doing. You can see it on the chart. Why would I want to believe anybody that what news people are saying or analysts when I can see it on the chart? I can see what's happening to the stock, whether it's being bought, sold, how extended, whether there's panic buying, panic selling. I can see that on the chart. Of course, price and volume. Price and volume. That's it. I don't need anything else. Okay? Consider both sides. During some earnings seasons, during some years, shorts pay off huge. In other years or other earnings seasons, longs work better. So you got to focus on what matters. Okay? You got to focus on what matters. So I want to show you, we want to talk about specifically the earnings play. All right? Here's the backstory. Many years ago, I began noticing a specific pattern that seemed to tip me off to the earnings reaction. It told me when expectations were right for a long or a short trade. And it also told me when a large reaction, a large gap was coming in my favor. I simply called it the earnings play. Again, this is the short version. The long version is I use TC2000 for scanning to scan for swing trades to this day. And living on the West Coast, the market closes at 1 o'clock as opposed to 4 o'clock. So I had all that time in the afternoon, and I would spend 2-3 hours at least every day after the close just flipping through charts on TC2000. Okay? And I started to notice a certain pattern, just one. Now I've identified 6. I've actually identified six. But I started to notice a pattern. And I started to notice that when this pattern happens, I mean, all the time I see these gaps coming from the same pattern. So it was perplexing. I would see gaps during earnings season coming from a certain pattern. And I thought, what's going on? In fact, I looked it up to see, was there like news about the stock? And I realized that the news was just earnings. It was actually the company reported earnings. And so I called it the earnings setup, the earnings strategy, right? At first, being that I pride myself in being rational, objective. I don't believe things quickly right away. I like to make sure they make sense, that the logic is intrinsically valid before I adopt or I start believing something. So I thought I was seeing things. I said, there's no way. So I hesitated. In fact, I spent 7 years studying the earnings play before I started trading it. And that's the absolute truth. And the reason why I didn't trade it for the next 7 years, even after noticing it in 2010, is when I noticed that pattern, is because I'm also risk averse. I'm not a gambler at heart at all. So, getting in stocks right before their companies report earnings is a bit of a gamble. You don't know. What if the company, the chart says it looks great, and I buy it, and the CEO comes on and says, well, everything is great, this last quarter was good, but I have cancer and I'm resigning effective immediately. And the CEO was everything, meant everything to the company, like Steve Jobs was to Apple, right? Then it would still gap down. So I didn't want to gamble. I didn't want to risk it. Of course, without risk, there can be no reward. So now I learned to take risk in an intelligent way. And I'll share that with you later on. So again, without risk, there can be no reward. So if some of you say, no, I can't do that, then no problem. No problem. This is not for you. Like it wasn't for me for 7 years. But in early 2017, day trading the first couple months was very, very slow. That's when I decided, the heck with it. I'm giving it a shot. So the first quarter of 2017, January through February, mid-January through the end of February, that's the first quarter, I paper traded that quarter and recorded all my results in a spreadsheet. And then in April through May, mid-April through mid-May, that's when I started actually trading it with real money. Small money initially, but then I upped it over time. Okay. On the downside, I missed out on a lot of money. It's absolutely true. I missed out on a ton of money. You'll see that later on. On the upside, it gave me confirmation that the strategy works, because we've been through multiple markets, bullish markets, the Great Recession in 2007, 2008, right? We've been through incredibly bullish markets. So it worked in every cycle, in every type of market, which gives me great confidence that it's not just a temporary thing that worked this quarter or that year because of whatever, right? Because of some extra volatility or something like this. No, it works in every quarter, in every quarter, but every year as well, in every type of market environment. To develop my earnings course, my earnings engine course, and my earnings strategy, I analyzed over 900 earnings gaps. At the time, I only had 900 something, 916, I think, is the exact number. So I analyzed them, and I narrowed the system down to 6 patterns. I added 2 more now, which are, so it's 6 plus 2. The 2 they're just a subset of the original 6. So there are 2, but they're similar, very, very similar. So there's actually a total of 8, but it's really 2. I mean, it's really 6 plus 2 like variables. Or I mean, two patterns that look very similar to the original ones, but with just a little tweak. Each has specific criteria and a checklist. The average earnings season gives us over 150 trades. Some earnings seasons are busier than others, for sure, but on average, we get over 150 trades in just 6 weeks, okay? My earnings play avoids the risk of sell the news. So a lot of times, we've all heard the saying, buy the rumor, sell the news. For example, when Tesla came out, showcased their Model 3 car, the stock actually sold off. Did you know that? The stock actually sold off. It was a beautiful car, very well received. The price also that they were gonna sell it for was great. The analysts thought it was perfectly priced, and yet the stock sold off. Why? Because traders had been investors. Wall Street had been buying it for 30 days in a row, for a whole month, and so they bought on the rumor. They already probably knew what it was going to look like, knew what Tesla was going to price it at, and when the news came out, then they sold, because they had no reason to be in it anymore. They were buying it for that news announcement. Once it came out, they sold it, and And so I don't buy stocks the market loves too much. I don't buy stocks into earnings that are getting bought. If the stock is getting bought, I can only short it, but it has to look a certain way first. Okay, it has to look a certain way, and if it looks a certain way, then I can short it if it's getting bought. And I don't short stocks that the market hates too much, that are being sold right now. You know why? Because think about it. If a stock is getting hammered, is getting really hit hard prior to the company reporting earnings, what does that tell you about the stock? What does that tell us about investor sentiment or expectation? It means traders really have low expectations for the earnings, for the quarter, for the earnings announcement. So when the earnings announcement comes out and it's maybe just okay, not great, guess what? The bar was set so low that when the company reports maybe numbers that are in line with expectations or slightly below, it can still gap up a huge amount because the expectation was very, very low. Likewise, people gravitate towards the big names like Apple and Google, and I play them when they set up, right? If they set up, I play them, no problem. I don't have a problem with playing them when they set up, or Amazon, but the thing is, a lot of people buy them before they report earnings. So if a lot of people buy the day before earnings, the day or two or three leading up to the earnings announcement, what do you think Wall Street's going to be doing? They're going to be selling because they already bought. That's number one. Number two, it means they have really high expectations for the stock. So unless the company does extremely well, reports maybe blowout numbers, it's not likely that it will gap up. It's actually more likely that it would gap down. Or if it does gap up, it's probably not going to be very much. It's going to be a small gap because it's already priced in. The bar was set really, really high. Does that make sense? So again, if you can just get that part of it, if you can just understand that part of it, you start to realize that you don't want a stock that is showing a lot of strength into earnings. I mean, you don't want to buy it. If it's a strong stock and is showing a lot, is getting bought ahead of earnings, you don't want to be buying that stock because it means, you know, everybody's already is bought it already, and the expectations are very, very high for it to do really well on earnings. We're setting the bar too high. Okay, traders panic buy and panic sell before earnings all the time. This momentary panic sets up the actual play. This is how I figured it out. Unbelievable. It's so simple, yet is very effective, as you'll see over the next 10-20 minutes. The three-step process for playing longs and short. So first, I want a specific type of an uptrend in place for longs, okay? I want momentary panic selling before the earnings report. This increases the probability of a gap up the next day and a continuation, because it would be a gap over a red bar, which means traders shorted it. The next day they're going to be trapped. They're going to look to cover, which would lead to higher prices still after the open. I want the momentary panic to happen in a certain area. Okay, I want the chart to look a certain way. This is way easier than making 5+ predictions that you have no control over. You know, you're relying on other people's information, like what the earnings per share are gonna be, what the revenue is gonna be. You don't know that for sure, but what I do know for sure that I have absolute control over is the chart, because I see it with my own eyes. I don't need to believe anything. I don't need to research, to scour the internet for information about that company. You don't need to do that. Okay, so notice this stock. We played this actually. We played it on this ENPH. What a great stock. Played it twice in 2 earnings season in a row. 2 or 3 maybe in a row. Notice how strong it was. So I do want a strong stock. But the day before earnings, so bullish uptrend, the 2 days before earnings, check it out, panic selling. So this is the Michael Jordan of stocks, really, really bullish. It went to $30-something before topping out recently, went totally climactic. Really, really, really bullish, and yet traders are selling it. Guess what? That's where I come in and say, oh, let me take that off your hands. Let me buy that. Okay? Because that means it's a strong, it's Michael Jordan stocks, and people have low expectations for it. And so that's the ENPH. Okay? Similarly, Match was a very, very bullish stock. It had a red bar right into that rising 20-period moving average on the daily chart. The next day, so panic selling, bullish uptrend, gap up, and nice little. I wasn't taking too much risk, so $1,800. Not bad for getting in at the close, at the absolute close. So I send an MOC order, market on close order. Some platforms, for some platforms it's called CLO order, like CLO for close, I guess. I trade with IB Interactive Brokers. It's called MOC, market on close. They fill you at the closing price, at the absolute closing price, and the next day I'm out at the open. 90% of my plays I'm out within the first 5 minutes, within the first 6 minutes, let's say, because I wait for the 5-minute bar to finish forming and set my stop under it. If I'm long, above it. If I'm short. So within the first 6 minutes, let's say, I'm out 90% of my stocks the next day. Okay. As you can see, there was one right here that I kept, but I think this was a swing, not an earnings play. All right, another example, SE, really, really bullish, rising 20, bullish uptrend, rising 20, panic selling, next day, bam, $5,600. Okay, $5,600. So you get the point. When I'm playing short, I want a downtrend in place, but not any kind of a downtrend, to tell you the truth. So I'm just giving you here, like general guidelines that you want a downtrend, but there are certain downtrends that I don't want to see in place. I want momentary panic buying before the earnings report. This increases the probability of a gap down the next day and a continuation lower. And then I want the momentary panic to happen in a certain area. So this is GME. I was doing a mentorship class in Chicago. Some of you maybe from Chicago or here. We were together. We did this, and downtrend rallied into a downtrend, the most bear stock in the country at the time, at least. GME, panic buying, people thinking, oh my God, this is down from $100, $50, whatever, down to $6. It can't go any lower. Sure it can. Sure it can. $4,200, right? And how much did I put in it? $10,000. That's it. $10,000 in GME. More second quarter of this year numbers for you, P&Ls, right? 10K, 4K, 11K, right? What is this? $5,600. Now, this last quarter, I upped my risk from, I think the one before that, it was 10,000 per position to 25. So last quarter, very last quarter, July through August, I went to 25K. Okay. Now I did initially, because I had two accounts, one for earnings, one for swings. So I would do in both, like separate accounts, and then I figured out a way with IB to use one account that sends an order to one order to each at the same time. So I combined it. But this is July 23rd. Okay, you can check the numbers if you want. That's July 23rd. This is July 24th. Again, you can check the numbers, if the prices of these stocks. And this was July 24th. This is, what was this? Let me just see. I'm just showing you July 26th. July 26th. This is July 30th. Okay. This is, again, two different accounts. But this is the same day. This is $31,000. July 31st. Okay. And so on and so forth. August 15th, August 5th, August 7th, 38. I was actually up 50, but by the time they all trailed, it dropped to 38. That's fine. I usually don't give back that much. This is August 8th. August 8th. Next one is August. Where am I? I don't know what the date is on this. Let's see. This is August 9th. I mean, you get the point. Look at this, just amazing stuff, right? And I'm not trying to impress you. I just want to show you what's actually possible. Some of you might think, well, what about the losing days? Yeah, I had 3 losing days, the entire quarter. I'm only showing you the P&Ls that were over 7K this last quarter. Only over 7K. I'm not even showing you all the small ones, the 5, the 6, the 4, the 2,000. Only showing you the 7K. What I showed you is 325K. 325K, what I just showed you. Okay. Now the point of this is not to try and impress you. I don't need to impress you. Okay. If you don't believe what I'm showing you, the strategy and the logic behind it, no amount of P&Ls is going to impress you enough to make you believe me, right? I'm not trying to make anybody believe me. Do the work for yourself. Find out if this really works or not, if you want. But I just want to show you what's possible and why I said earlier that when there's an opportunity, you got to go for it. You can't just wait around and think that it's going to last forever. Every earnings season at some point comes to an end, and then there's a couple months after that of slow times in the market where one company reports, sometimes couple, sometimes none. Today I don't have anything overnight. Yesterday I said ANGO, Alpha, Nancy, George, Oliver. So that's the symbol that I took. So one play. Today, none. I didn't take anything. But that's because we're right now, I mean, there's not a whole lot of companies reporting, right? So I hope you enjoyed this. And let's go ahead and distill everything you just learned into a few simple concepts. First, stop predicting and focus on the trend on the chart instead. Spot short-term breaks in trend, because short-term breaks in a well-established uptrend is a good thing. That's your opportunity to get in there. That's the panic buying, the panic selling. Or a short-term break in a downtrend, that's the panic, the momentary buying that you want to fade going into earnings. Remember, when people are panicking, whether they're panic covering, panic selling, it gives you a window to get in. It's like, remember that quote about the word crisis in Chinese, that it's composed of 2 characters. One represents danger, the other represents opportunity, right? Well, it's the same here. So when there's a crisis or there's some panic selling, that's actually an opportunity for you, if you know what you're doing, to go in there and take those shares off their hands, or to take advantage, basically. I don't like to sound like a meanie, like a mean guy, but that's the way it is in trading. One guy's loss is another trader's gain. All right. And then number 3 is I open the trade at the close, and then I exit the next day at the open. That's it. Open at the close, close at the open. That's it. Okay. Okay. So this is how the earnings play has worked out. 1,100 plays listed for over the last 2 years. Total profit is 339, assuming 25,000 per play. Average net trade is $269 per trade. Now you might say, 269? How did you make 87,000 or whatever, any of these numbers with 269? Yes, it's 269 per trade, meaning that factors in all the losing trades. So per trade, you take 10 trades, 5 of them might be losers, 5 of them winners, but when all said and done, you're gonna make on average $269 per trade. That's nice, easy money, just for getting in at the close, getting out the next day at the open. So just 3 winning trades would equal $807 per week. Okay, based on actual trades. Some trades are too thin to call sometimes. I may do them on my own if the stock does, let's say, 100,000 shares or less, or 200. I usually only call the really liquid ones, That's based on just the actual trades that I called in the Strategic Swing Trader newsletter. And then remember, 2017 is when I first started trading it live. I mean, I wasn't, it was still new to it. So I'm much, much better now. In fact, as I said earlier, the P&Ls that I showed you, basically, if you add the numbers, that's 325K, 325K. All right, after commission, because all of these, almost all of them, I'm showing you after I exited. See this? That's after commission, on the way in and way out. But we're going into the zero commission environment now, which I'm looking forward to. All right. So we talked about that, talked about this. I'll end with a question. Earnings season is just about to start. It actually hasn't started yet. Are you ready to take advantage? Are you ready to do something different? Or do you want to continue to do what you've always done, which ensures that you end up with the same kind of result that you've been having, that you've been getting? Up to you. I'm presenting you with an opportunity to do something different and to participate with me with something that's revolutionary. I didn't learn this from anybody. You're never going to see somebody talking about this unless they start copying me or they start putting videos hating on what I do because they're jealous. It's one or the other, right? And it's why I can show P&Ls they can't, right? So I just want to say, if you're ready for something new, maybe you will listen to what Mike has to offer. So, okay, I'm going to pass the mic over to Mike. All yours, Mike.
Okay. Thank you, Sammy. So, what did you guys think of Sammy's presentation? Are you guys interested in trading earnings? Because every time we do this webinar, I want to quit my T3 Live job and just trade earnings. So yeah, so we're getting some yeses. Yeah, earnings is a hot topic. So like I said before, you are definitely in the right place. So you learn the basics of the system, and we're going to help you learn the rest. So we are hosting the 4th ever live online earnings engine class, Saturday, October 12th at 9 a.m. And yes, we will get to questions very soon. So the whole goal is to make earnings season easier, make it more rewarding, make it more predictable. We want you to look forward to earnings season. A lot of traders dread earnings season because they're afraid of the volatility. But once you learn Sammy's strategies, you might not trade anything else. You won't be able to wait for earnings season. So again, it's 4 hours of live training. You get the complete video replay for repeat viewing and a 127-page course guide. So Earnings Engine is our #1 course of 2019, and it's our second most popular of all time. And in fact, probably after this course cycle, it's probably going to be our #1 class of all time. That's how much people love it. And the reasons people love it are pretty obvious. Again, you make more money in shorter periods of time because you know when volatility is coming. You open at the close, you close at the open, so the trades happen fast. When other traders are panicking, you are profiting. And you get easy 3-step checklists for going long and short. And Sammy said before, a 7th grader could do this. He wasn't lying. If you can read a basic chart, you can understand this strategy. And these are the 6 patterns. There's the pullback play, the breakout play, transition A, transition C, the run play, the unfilled gap. So each one of these has its own checklist. They're all super easy to learn. It's very user-friendly. And this is basically everything you need to know, almost everything you need to know. So there's also the reality of price action. This is going to help you figure out when to be long, when to be short. You're going to learn the cycle of price that every single stock follows. And this gives everybody the same technical foundation for the course. Also, trade metrics. A few people already asked about scanning. It's all covered in the course. Sammy's going to show you exactly how he scans and selects the setup so he gets the best possible trades. And we talked about it before, the entry and trade management process is ridiculously easy. So you're not going to be fumbling around, going crazy trying to get in and out. It's really easy. And also share sizing. so you can quantify the risk on each trade. So this is what a few students have said, including I'm going to show you probably what is the best testimonial in T3 Live history, because we have a student that might beat Sami. So Yen Kai from Boston said, Sammy's earning plays make me money. I do not need any other trades during earnings season. This trader didn't want his name mentioned. He said he tripled his money using the earnings engines class, even though he's a novice trader. James from Ohio, Sami, you killed it today. I'm up over $5,000. So he made over $5,000 in earnings plays in one day. And this is the best earnings engine success story we've ever heard. Raj from New York, he's up $79,051 for this. This is last earnings season. Over $79,000, taking $3,000 to $5,000 a trade. Intends to increase share size, which is mind-blowing, because who knows, Raj might catch up to Sami and take him over. So sorry, Sami, Raj might be on the next webinar because he's killing it. So let's talk about price. So the price of the course is just $395. That's for the 4 hours of training. It's the course guide and the video replay. Again, just $395 for a whole new way to trade, windfall profits every earnings season. You can go to t3live.com/EE. t3live.com/EE. But we have something a little special to throw in. So the regular price is $395, but because Sami's a nice guy, if you sign up by midnight tomorrow, you can save $100. So we'll take off $100 if you sign up before midnight tomorrow. So you can go to t3live.com/EE. You see the link down there at the bottom? Just type that in. I'm also going to shoot out the link in the chat. And you'll save an extra $100. And you saw the kind of results people are getting. So we think this is an amazing deal. Again, t3live.com/EE. Somebody is complaining right now that this doesn't answer my question. You can get the replay. So if you can't attend live, just email us at info@t3live.com and we can help you. So somebody's just asking, can the videos be downloaded? No, it's streaming. So you can't download it, but you can watch from a mobile device or your computer, whatever you have. So the training is 100% interactive. This is the whole point of live training. So Sami can answer all your questions so you understand exactly how the strategy works. Also, video replay. So this is streaming video replay. A few people asked if it could be downloaded. No, it's streaming online. About 40% of people don't actually attend our live courses. They just catch the replay later. Also, some people leave early. And you can email in questions later on if you need help. So a few people said, like, what if I can't attend live? You can email questions in, and Sami's happy to help you. And we recommend you watch the video replay at least one more time, just to really solidify the concepts in your head. So again, t3live.com/EE. You own the course. Somebody asked, do we own the course for life? You basically own the course as long as we are in business. So if you can call that for life if you want, for legal reasons. We don't know if you're going to have this course 100 years from now. So why now? It's a good question. So earnings season is heating up starting on Tuesday, October 15th. That's when JP Morgan reports. And that pretty much kicks off earnings season. And then a few weeks after that, you're going to have hundreds of companies a day reporting. So this is the most lucrative time of year to trade. It starts in less than 2 weeks. So you want to take the course, and that will get you ready. Again, t3live.com/EE to sign up. So tons of setups available during earnings season. You're going to get about 100 to 200 setups per earnings season. And Sami has found 20 plus setups in a single day. So you'll always have ideas. So a few people are asking about, like, will I get Sami's trades? This is the course. This is so you can find them yourself. So again, this is education. And don't forget, companies are always reporting earnings. Earnings season is obviously when most companies report, but not all. There are companies reporting earnings almost every single day. In fact, this week alone, 25 companies reported, and this is before traditional earnings season. So you can use these strategies year round. And again, can't recommend this enough. It's easy to learn. If you can follow a simple checklist, you can use these strategies. Even beginners can follow these step-by-step instructions. And again, trade management is dead simple. You get in at the close, you get out at the open. That's all you have to do. You don't have to watch the market all day long. You set your orders and you're done. And it's okay to start by paper trading. If you're afraid to get your feet wet, start tracking them on paper. You'll get used to spotting the setups. Then you can gradually introduce real capital. So all the secrets are revealed. You're even going to know how to scan for the earnings plays. You do it with a free website. You don't need any extra software. You don't need a special platform. You don't need anything extra. If you have basic charts, you have everything you need. So a lot of people, who trades options here? Type in a yes if you trade options. So yeah, somebody said me. A lot of people trade options. So you can use options if you want. So I'm just seeing how many people are answering about options. So the course teaches stocks. This is a stock trading course, but some students use options. This is George from Chicago. Sami talked about him before. He talked about this. This was a trade. These were trades in the last mentorship in Chicago. So George from Chicago, he made $8,890 on pivotal puts and another $2,800 on GME. So you can use options. This will teach you to pick the stocks, and then you will have to do your own option strategies. He's not teaching options in the course, but if you're looking for big earnings movers, you can use your option strategies on these stocks. And if you're afraid to short, that's okay. You can trade long only if you want. Some students have had success trading long only from Dave from Canada. He only went with the long trades. He had an 83% success rate. He made $4,200 on one trade. So guys, again, t3live.com/EE to sign up for this course. And you have until tomorrow night to save $100. So this is what the slide looks like. Everything's pretty self-explanatory. It's pretty easy to understand. This is not rocket science. Sami keeps it super simple, teaches everything step by step. So somebody asked, is there any follow-up required? No, you learn the strategy and you're ready to go. And again, here's another slide. We're blocking out this part just to, protect people in the class. And again, guys, $295, that's $100 off until tomorrow. You have to sign up by tomorrow. The course is on October 12th. Just click the link. I'm going to send out the link again to everybody. Click the link and you'll get all the information you need. And again, the course is October 12th, Saturday, October 12th. I'm making sure everybody has the link. You can also go to t3live.com/EE. This is what the screen looks like. Just click the orange button and there's all the information about the course is here. t3live.com/EE. I also sent the link out to everybody. And again, you save $100 if you sign up by tomorrow night at midnight. James from Ohio again. You killed it with earnings plays. Out of everything except Kirk, I'm up over $5,000. And yes, we will be doing the full Q&A very, very soon. Again, George from Chicago. He made almost 9,000 on pivotal puts, 2,800 on GME puts. Jason from California. Earnings engine easy to apply. Profits are sometimes higher than expected. Sami really knows how to teach and make things simple to remember. And again, I said this before. I've taken multiple Sami classes. When I see how much money he makes and then I see how simple the strategies are, I don't believe it. I think it's silly because he's making so much money, but everything is still so simple, which I think is unbelievable. Yen Kai again. Sami's earnings plays make me money. I do not need any other trades during earnings season. Randall from Pennsylvania. Subscribed to Strategic Swing Trader for a year. Paid for my subscription on the first day with the earnings plays overnight. That's unbelievable. Again, you saw this before. Able to triple my money even though I'm a novice trader. So a total beginner tripled his money. And okay, so Ted from Colorado, Sami's patient. I'm going to blaze through these really fast so we can get to the Q&A because I think we're dragging on a little long. Ted from California again, surprised to learn the direction of the gap is really predictable. And again, Raj from New York. Raj is the king of earnings. Over $79,000 in an earnings season, and he's increasing size. So one more time, let's summarize it. It's just $295 for 4 hours of live online trading, 127-page earnings engine course guide, video replay in case you can't make the live session. And you save $100 if you sign up by tomorrow. You can use any platform. You don't need any special indicators. You need moving averages, and that's it. You don't need anything special. You could use free stock charts or whatever. You don't need any special platform. Sign up now. You have to get in by tomorrow to get this price. t3live.com/EE, t3live.com/EE, and that will take you to the page. I'm going to pop the link out one more time. And if you have any questions, if you want a bundle, a few people are asking about bundles, email info@t3live.com. Info@t3live.com. I'll say it one more time. Info@t3live.com. If you want a bundle, if you want Sami's picks, info@t3live.com. So I'm going to bring Sami on right now. So Sami, my friend, are you there?
I sure am.
Okay, so just to make this clear, a lot of people are asking about scanners and platforms. Do people need anything special to make these picks?
No, I will show you which website I use to download the earnings list from. From there, you copy the list and paste it into your platform, whatever platform you use, whatever charts you like, and then scan for these 6 patterns that you're going to learn in the class. That's it. Very simple.
Okay, so can we use these strategies on a daily basis?
I use them. I scan the earnings list every single day. It's just that during earnings season, we have hundreds of companies reporting per day. For example, today, I just checked, by the way, if you're in the Strategic Swing Trader with me, which 2 companies did I pick? There were 3 companies reporting. Which 2 did I pick? But I said I'm not going to take them. They're not that good. I picked Costco as a short, and I picked SGH as a short. That's it. They're in the newsletter right now, in the spreadsheet if you want to look at it, and they're both gapping down. So you can use you can scan for earnings plays every single day, and I do so as well. But during earnings season, you'll find dozens per day, a dozen sometimes or more per day. During non-earning season, like right now, okay, you'll find one, two, three, but you can use the six patterns throughout the entire year.
Oh, okay. Another good question we have here. So how much time? A lot of people are asking, is this day trading or is it swing trading? So why don't you go over the time frame one more time?
So the patterns that we scan for are on the daily chart, okay? Once you identify the pattern, you don't need to stock it or enter in a certain way. I just submit an MOC order, a market on close order, and I buy it at the close or short it at the close, and then I get out the next day at the open. So it's overnight. I hold it overnight for basically 1 minute, sometimes just 1 minute, in at the close, out exactly at the open. So that's what it is. It's a swing trading, but you don't need to like enter a certain way. You just enter at the end of the day, exit the next day at the open. That's it. Nothing else.
Okay. So another great question, Sammy, is this entirely technical, or do you read any news? Do you get research reports, or is this just the charts?
Just the charts. Just the charts. Like for example, Costco. Just Costco. I called it a short, but I didn't send out an alert about it because I didn't think it was good enough. We discussed it today in the room, and I said that's a short, not a long. It was a big green bar into a declining 20. That's why it was a short, and extended on the weekly chart. But think about it like this: Costco. Have you ever? I mean, some of you probably go to Costco. I can't. I have a Costco membership. I can't get in there. It's that busy. I'd have to park the car way outside the parking lot on the street because it's so busy. And yet it's a short. It wasn't a long. Now it looks like it's gapping down a little bit, not much. Of course, big names like Costco, they don't gap that much. And that's why I don't really even gravitate towards them, because then the opportunity isn't going to be huge, just to make small money. But the point of this is I look at the charts and I ignore the name or the symbol completely. I don't even care which company it is, whether it's Google, Apple, Costco in this case, whatever it is. If the pattern is good, it's good. If the pattern is not good, then then it's not good, regardless of how good I think the company or how well I think the company is doing. So it's 100% technical.
Okay. So are there do you are the trades are there different quality of trades? Like, is one earnings play better than another? Like how is there any kind of rating?
No, it's like an on or off system. It's either there or not there. I will share with you the six patterns. You just basically, you can even print a picture of each pattern, put it on your desk or your monitor. I, to this day, have a post-it note with the names of the six patterns. I don't have a picture because I know it like I know my name. I know, I know what the picture looks like, but I do have the six patterns listed on a post-it note on the side of my monitor. This way, I just ask myself, which one of these patterns is it? Is this chart pattern? Because if it's not one of the six, then it's not there. So it's an on or off system. Some stocks will gap 50% in your favor. I mean, I had several gaps that went 50% in my favor this last quarter. Sometimes, okay, if it's a big name, I mean, do you think Apple would ever gap 50%? Amazon, Google, the big names? No, they're not going to. Microsoft, Walmart, are we ever going to see 50%? No. So some stocks are more volatile and they result in a bigger opportunity, bigger P&L, but the pattern is either there or not there. That's it. Okay?
Okay. So we're going to do a little bit of a pivot here. A lot of people are saying, like, how do I get Sami's earnings trades? So does anybody just want Sami's own trades? Type in a yes if you want Sami's trades. Okay, so if you're interested, instead of the course, if you want Sami's trades, you can go to t3live.com/swing for the Strategic Swing Trader newsletter. That's going to take you to this page. And you will get Sami's earnings plays. If you get the Strategic Swing Trader newsletter, Sami will send you his earnings trades every day, as long as there are plays. On most earnings days, there are. But if you just want Sami's trades, you can go to t3live.com/swing. I'm going to shoot out the link if you just want the trades.
And Mike, you might want to mention it's dirt cheap. It's $95 per month. Just
Yeah.
FYI, it's $95 per month. Now, that's a newsletter that I send out on a daily basis. During earnings season, every single day there's a pick. During non-earning season, there might not be a pick in the afternoon, but in this newsletter, you get both my trades, my swing trades, and my earnings plays. If you want to learn my system, then it's the class, the earnings engine class, which I'll be teaching on the 12th. If you just want my trades, then that's the newsletter you subscribe to. What if you want both? You want to learn the system so that you're not following me blindly, and you also want my trades, then take both. The earnings engine class, which is again on October 12th, and subscribe to the Strategic Swing Trader newsletter. You get the best of both. You get both. So this way you're not following blindly. You actually really know the system. And to make it even better, you can bundle. It's only $95 per month. If I go to a restaurant, just any restaurant in town, sit down restaurant, with a glass of wine, I'm getting with my partner, with my girlfriend, it's gonna be $95 minimum. That's 95 bucks for the whole month. And that's again, and you can bundle with the subscription with the class. So feel free. Mike, sorry, all yours.
No problem. So we're going to do, so I'm going to just give me 1 second. I need to type something and throw it on the screen. So if you want a bundle, this is what you need to do. You have to email info@t3live.com and ask for the Super Sami bundle. You have to use this phrase. You absolutely have to use this phrase or my team won't get it because I'm flagging them. We're flagging the email. So please use Super Sami bundle in the email so we know what you're talking about. And they will make you a deal.
That is funny, by the way.
Yeah, so we're calling this the Super Sami bundle. So my team will take care of you. Again, info@t3live.com and ask for the Super Sami bundle. And my friends at T3 Live will take care of you. So what other questions do you guys have? Again, to get into the class, t3live.com/EE, t3live.com/EE. Let's see what other questions we have here. So yes, we are sending the replay. I will send out the replay myself at 7 p.m. Eastern time, which is 1 hour and 15 minutes from now. So here's a good question, Sami. So why don't you use options on these strategies?
That's a good question. I think you got me. The reason for that is because options get really expensive premium becomes really expensive right before earnings, and the premium gets sucked out of the option right after earnings, which means you could be right about the stock and still lose money on the option. So that's the issue. Is I've been right about many times. I've been right about the direction, about the stock, and it would gap in my favor, and I would still lose money. So I said, to make things easy, even though I initially made I made $5,000. I had a $20,000 account. I made $5,000. But to make things easy for me, I just said, okay, I know that the average gap, earnings gap that I trade is 5.6%. That's the average gap size. If I want to risk $1,500 per trade, I do 1,500 divided by 5.5%, 5.6. That means I ought to take $25,000 worth of stock. So that's how I figured out how much to put in each stock. The average gap turned out to be 5.6, 5.5 something. Let's say 5.5%. So I backed into it. So I said, okay, well, I want to risk $1,500 per trade. How much money do I put in each stock? And so now it's straightforward, and I just use the actual stock. The other reason is I like to keep things simple. I don't want to be trying to figure out the right option. I'm not an options expert, not an option expert. I'm not expert at trading options, so I don't want to be wasting my time. I just want to be spending my time scanning and looking for the patterns, not trying to figure out which options to take. But look, a lot of my students, subscribers have had a lot of success with options. Feel free. There's nothing against it. It limits your risk just in case the stock does end up going against you. It limits your risk, and you get a bigger bang for your buck if you're really right. What I do say oftentimes is, on the companies that when they gap a huge amount up or down, the really volatile names, those are the ones you want to use options for. But on companies that are going to gap just a little bit, that normally just, let's say, gap 2, 3, 4%, like Costco, then might as well just play the actual stock. Okay, but for small accounts or people that really want to limit their exposure, or people that are really good at options, go for it. That's the way. I mean, that's great. Why not? But not for me personally.
All right, Sami. So somebody asked, when does earnings season officially start? There's no real official start, but basically it heats up when the banks report, which is October 15th. So less than 2 weeks from now. That's why we're holding the course on the 12th. So you'll be ready for earnings season once things really heat up. So guys, again, t3live.com/EE to get this price. And if you want the Super Sami bundle, which is a secret bundle, I'm actually breaking the rules here. If you want the Super Sami bundle, email info@t3live.com and make sure you put the words. I can't announce it on this call. I'm not allowed. You have to email in to get it. People are asking what's in the bundle. You have to email in. I can't tell you right here. Email in and you'll get all the details. So let's see, what other questions do you folks have? And who else is joining tonight? So somebody asked, what time are alerts sent out? And it's around 3:30 p.m. Eastern time, so about a half hour before the close.
And often at 3 o'clock. So it gives you, an hour to look at the symbols, but all you need to know is these are the symbols that I myself will be taking, 100% will be taking. So if you believe in my system and you agree with it, you just basically, all you need is 5 minutes to enter the orders in the system. In fact, with IB, it calculates the share size for you. I just type in the symbol, it calculates the share size. Because in the global configuration, I chose, instead of shares, I chose amount, and I put in 25K per trade. By the way, the first the first bank that reports is Citibank, and it reports next Friday. Not tomorrow, but the next Friday. So actually, it really kicks off on the 11th. So in just 1 week from now, but it doesn't get going until the following week, the week of the 14th. And so you'd be taking the class at the perfect time, the weekend of on October 12th, right before earnings season really gets going.
Okay. Here's an interesting question. How do you set up auto close? How do you set up to close the trade on the open? I would assume, Sammy, that that's different for each broker.
Yes, yes and no. It's almost the same. With interactive brokers, it's called an OPG order. OPG order. I didn't know what an OPG order until I started doing the earnings strategy, and it's basically it guarantees you a fill at the opening price. I didn't know anything about this order until I started taking these earnings plays. So I just send an order in the pre-market or the night before. I send it an order, and then the next day it executes at the open. Likewise, let's say I picked my plays, and or I picked my plays, I sent them to you. You don't even need to watch. You can just submit an order, an MOC order, and it executes your trade. Gives you you get executed exactly at the closing price, and it's called an MOC order. So I enter with an MOC and I exit with an OPG, or some platforms might not have that OPG order. Some platforms it might be just a market order, and as long as you send it in before 9:15, then it's the same as an OPG order. That's the case for E-Trade, for example, because they're free commissions now with E-Trade, so I'm switching to E-Trade. And I said, and I looked in the order entry window, and there's no OPG order. I said, hey, what's going on? I need that kind of order. I need that order type. And they said we don't have an OPG order, but as long as you submit the order by 9:15 in the pre-market, you're guaranteed to fill at the opening tick, so you don't take any slippage. Okay, so I hopefully I answer your question.
Okay. Do you ever have any issue? Here's a good question. Do you ever have issues locating short, like borrowing shares before earnings?
Yes, if you're with the wrong broker. That's the reason why I've been with IB, because they have everything available, even penny stocks available to short. Not that I short penny stocks, I don't. But that's the reason why I'm with IB, even though Interactive Brokers is not a cheap broker. The other broker that has a great short list is E-Trade. So I'm going, now I don't want to be recommending brokers, you do your research, but I'm telling you where I'm going to be trading. They have a good short list. I have always traded with Ameritrade in the past, but they don't have the best short list. So I'm not going, so I don't trade there anymore. So again, do your research, but for the best short list, I found IB for the best ETB list, easy to borrow list. I found IB to be the best, but now that E-Trade is pretty much just as good with zero commission, then I'm going there. Okay.
Okay, guys. I just want to recap the deal. You save just for just $295. You save $100 if you sign up by tomorrow night. It's 4 hours of live online interactive video training, 127-page course guide, plus the video replay in case you can't make the live session, and also for repeat viewing. And again, just $295. And to save $100, you must sign up by tomorrow night. You have to sign up by tomorrow night. So go to t3live.com/EE. I'm going to shoot out the link to everybody one more time. t3live.com/EE. And you can sign up. So here's a good question. So Sammy, so why do you close it at the open? Why don't you wait a few tickets to see if you can make even more?
Yeah, so this is the thing is, I recommend that you wait for the 5-minute bar to close. There is one rule one management rule that I'll teach you in the class that will tell you whether to close it or to keep it. There's one rule, okay, that will tell you whether to close it at the open or keep it. And I like to keep things, and I started actually keeping plays. But the problem is I also run the strategic day trader room, and I'm moderating on the microphone just like this at the open. So it's a bit difficult for me, but actually if you keep plays, you can make more money, a lot more money. So there is one rule, and if you can just follow that rule, then you're all set. Then you'll know which ones to close early on and which ones to keep.
Okay. So guys, so we are going to shut down right now unless you have any more questions. Do we have any more questions out there? Going once, going twice. And so all right, so somebody just said to trade a dozen trades per day, you need a lot of capital, right? So what do people do if they don't have a lot of capital? Can they only do like one trade a day or two trades a day?
You can, but can you go back to that testimonial from Raj? Raj actually attended my mentorship live in person in New York City. So that's how well I know Raj. Okay. Just want to see it again. I've never seen that testimonial before, but Raj is somebody that I met in person in New York City. Let's read it. I'm up 79,000 for this earnings season, taking 3,500 to 5,000 per trade. I intend to increase my share size next quarter. Guess what? Just by taking 3,500 to 5,000 per trade, he was able to make $79,000. You know what? I believe him because I made over $350,000. Okay, I believe him, and so you don't need a lot of money to take all the plays, but if you take the class, you will learn the system. Then you can actually decipher, determine for yourself which ones you like the most and which ones you want to pass on. Some of the names will be the big names, the mainstay, I mean the blue chip that won't move very much. You might say, well, I don't want to take these. I have a small account. I'd rather use it on the small cap stocks because those will make more money. And now Raj has $79,000 more that he can use for earnings this quarter. You always at some point you always start small unless you inherit a lot of money or somebody gives you a lot of money. I started small. I came to this country penniless 18 years ago, absolutely penniless. I'm a millionaire now. I hate to say it, I'm sorry to say it, I don't like to brag, but I just want you to know that we've all started small. I started small, and you just gradually increase. If you're determined, if you are determined and driven and you're willing to put in the work, nothing can stop you. Nothing can stop you. Okay? So, so again, you start small. It's, if you have the capital, that's wonderful. Then you have the flexibility to take all the trades. But if you don't, you can still make it work. Okay? Just like Raj did last quarter. Of course, last quarter was pretty special. I hope this next quarter, if the market, especially if the market tops out, actually, it's been very shaky back and forth, but especially if the market tops out, it'll be even better. So I'm hoping next quarter will be just as good. And now I have, I mean, in just between the last week of July, first week of August, I made 350. So I have that much more for next quarter, and you build on it. And now I don't have to limit my risk to $1,500 per play. I can go to $3,000 per play, no problem, right? Because I already have a cushion built in. So you just start where you are, however much you have in the account, you start there and you build on it. All right, Mike, back to you.
Okay, I think that's we'll end on that with this positive quote. You don't have to be great to get started, but you have to start to be great. It's a little cheesy, but It's kind of true, isn't it? Everybody agree?
Not cheesy at all. I love it.
Yeah. The biggest mistake people make in life in general is they just don't get started. They sit around waiting for something to happen, and it never does. So again, I want to be like Raj from New York. I think he might take out Sami. So maybe next quarter we'll have Raj on. But no, sorry, Sami's my favorite. So guys, again, it's just $295. You save $100 if you sign up by tomorrow night. 4 hours of live online training. You get the 127-page earnings engine course guide. You get the video replay. And again, just $295 for a whole new way to earn windfall profits every earnings season. Visit t3live.com/EE. I'm going to shoot the link out one more time because I know you'll love it. Everybody have the link? And you can also email info@t3live.com if you have any questions. If you want a bundle, if you're interested in day trading or any of our other services, I will also shoot you this link to. Actually, never mind. So, guys, again, to get in at this price, you have to sign up by tomorrow night. t3live.com/EE. And that's it. So, Sami, always a pleasure.
Thank you, Mike.
All right, everybody, thanks for joining us. It's been about 90 minutes. You're still with us, so we really appreciate it. We value your time, so we hope you had a good time tonight. So again, t3live.com/EE, and you can sign up. Thank you very much.
Thanks, guys. Have a good night, everybody.